Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Fluor Corporation Annual Report. Fluor Corporation offers a diverse range of services to various industries worldwide. At the core of their business are engineering, procurement and construction, EPC services, which cater to multiple sectors including advanced technologies, life sciences, mining and metals, infrastructure, traditional oil and gas markets, and energy transition markets. Their Urban Solutions segment provides EPC and project management services, as well as professional staffing and maintenance services. This segment caters to industries such as manufacturing, mining and metals, and infrastructure. The Energy Solutions segment offers EPC services for various energy-related sectors including production and fuels, chemicals, LNG, power, nuclear power, low-carbon energy sources, asset decarbonization, carbon capture, renewable fuels, waste-to-energy, green chemicals, and hydrogen. They also provide consulting services like feasibility studies, process assessments, and project finance structuring. The Mission Solutions segment offers technical solutions to governments and commercial clients in areas such as nuclear security and operation, nuclear waste management, laboratory management, site management, environmental remediation, decommissioning, logistics, EPC, life support, and operation and maintenance services for mission-critical facilities. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what could cause a stock price to increase. The stock price of a company like Fluor Corporation can be influenced by various factors that contribute to its overall performance and growth prospects. One key driver is the company's financial health, including revenue growth, profitability, and cash flow generation. When a company demonstrates strong fundamentals, investors tend to become more optimistic about its future prospects, leading to an increase in stock price. Another significant factor is industry trends and market demand. If Fluor Corporation operates in a growing sector with increasing demand for its services or products, the company's stock price may rise as investors anticipate higher earnings and revenue growth. Additionally, mergers and acquisitions, new business wins, and strategic partnerships can also contribute to an increase in stock price. Furthermore, changes in leadership, management decisions, and corporate governance can impact investor confidence and sentiment, influencing the stock price. A well-performing company with a strong track record of innovation, customer satisfaction, and social responsibility may attract more investors, driving up its stock price. Lastly, external factors such as economic growth, interest rates, and regulatory changes can also affect a company's stock price. When these macroeconomic conditions are favorable, companies like Fluor Corporation may benefit from increased demand for their services or products, leading to higher earnings and revenue growth. In summary, the increase in Fluor Corporation's stock price over the past year is likely due to a combination of factors, including strong financial performance, industry trends, management decisions, and external economic conditions. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of the financial report's extracted summaries. On the growth side, government agencies and single urban solutions customer have been significant contributors, accounting for 17% and 15% of total revenue respectively. New awards from clients and increased project execution, volume in life sciences and mining and metals projects have also contributed to revenue growth. On the decline side, a reversal of previously recognized revenue for the Santos project in Australia has had a notable impact, as well as a decline in execution activity for energy solutions projects nearing completion. Additionally, decreases in compensation expense and net interest income due to lower stock prices and cash balances at certain joint ventures have also contributed to revenue decline. Market diversity and competitive strength in engineering, procurement, and construction business, ability to execute complex projects of varying sizes, and strong safety record and lengthy experience with a wide range of services and technologies are factors that affect both growth and decline. Volatility in NuScale's stock price and delays or defaults in client payments have also had an impact on revenue. The company's net income and profit margins have undergone significant changes over the past few years. Initially, net income decreased due to intense competition, increased labor costs, and uncertainty of contract, award timing, and unexpected award cancellations. This trend continued in 2025, with a net loss of $62 million reported. The decrease was attributed to increased costs from climate-related regulations and sustainability initiatives. Profit margins also declined across various segments, including urban solutions, energy solutions, and mission solutions. The decline was largely due to downward pressure on contract prices from intense competition and inability to meet competitive challenges. Additionally, specific factors such as forecast adjustments, a judgment on the Santos project, and recognition of revenue reserves for disputed costs contributed to the decline in profit margins. The effective tax rate excluding equity method earnings increased by 241% in 2025 compared to 2024, further impacting net income and profit margins. Overall, these changes indicate that the company is facing significant challenges in maintaining its profitability amidst increasing competition, regulatory pressures, and other external factors. The company's financial performance indicates a significant issue with its operating cash flow. In 2025, the company generated a substantial loss of $387 million in operating cash flow. This negative operating cash flow is a major concern, as it suggests that the company is struggling to generate sufficient revenue from its core operations to cover its expenses. As a result, the company's ability to invest in growth initiatives, pay off debts, and reward shareholders may be severely impacted. The company's debt level has undergone significant changes over the past year. As of December 31, 2025, the total long-term debt stood at approximately $6.8 billion, a notable increase from previous years. This is largely due to the redemption of $37 million in aggregate outstanding 2028 notes, which was down from $57 million in 2024. However, it's worth noting that the company has been actively managing its debt levels through refinancing and redemption of certain notes. The presence of a $2.2 billion credit facility also provides a significant cushion against potential increases in debt. Nevertheless, the overall debt level remains substantial, indicating a considerable financial commitment for the company. In terms of interest expenses, the company's long-term debt features fixed-rate coupons, which has minimized its exposure to floating interest rates. This suggests that interest expenses are relatively stable and not significantly impacted by changes in market interest rates. However, there is still a risk of increased interest expenses if refinancing of debt occurs at higher interest rates. The company's performance varied across different segments and regions. On the positive side, Urban Solutions stood out as a strong performer, particularly in advanced technologies and manufacturing. This segment saw significant revenue growth and an increase in new awards and backlog. Energy Solutions also showed promise, with its traditional oil and gas markets and energy transition markets performing well. In terms of geography, North America was another region that performed well, driven by urbanization and the need to replace or expand aging infrastructure. Mission Solutions also reported increased revenue due to construction projects and hurricane claims administration. However, not all segments and regions fared equally well. Energy Solutions experienced a decline in revenue due to a judgment on the Santos project and reduced execution activity. This segment's performance was a notable contrast to its strong showing in traditional oil and gas markets and energy transition markets. Overall, the company's diverse portfolio helped mitigate some of the challenges faced by individual segments and regions. Management is optimistic about the company's outlook, driven by a strong global footprint and a focus on delivering large, complex projects in challenging locations. The company aims to drive growth through contracts with fair commercial terms, while reinforcing financial discipline and fostering a high-performance culture. To mitigate market cyclicality, management has diversified across various industries, including life sciences and mining and metals. The Urban Solutions segment is expected to see increased execution activities, while the Energy Solutions segment will focus on ramping up execution in 2026. Management also expects to monetize remaining ownership in NewScale by the second quarter of 2026, generating significant revenue. Additionally, the company plans to execute approximately half of its ending 2025 backlog in 2026 and target $1.4 billion in share repurchases for the same year. Overall, management's strategy is centered on driving growth, executing projects efficiently, and managing risk through diversification and strategic investments. The company has a history of paying dividends and buying back shares to return value to its shareholders. In terms of dividend payments, the company paid out $29 million in 2023. However, it's worth noting that no dividends were paid from April 2020 until then. This suggests that the company may have been conserving cash during this period or prioritizing other uses for its funds. Regarding share buybacks, the company has been active in repurchasing shares to reduce its outstanding stock and potentially boost shareholder value. In 2023, it bought back a total of 9,160,452 shares at an average price of $42.43, with a total consideration of $389 million. This activity continued in 2025, when the company repurchased 18 million shares for $754 million. Supply chain disruptions, a growing concern. The extracted summaries reveal several concerns regarding supply chain disruptions that could impact business operations. One of the primary concerns is the availability and pricing fluctuations of raw materials, as mentioned on page 9. This uncertainty can lead to project delays and increased costs. Furthermore, unexpected changes in foreign countries, page 13, and global trade policies, page 15, may also disrupt supply chains. Additionally, potential financial difficulties among suppliers or subcontractors, page 17, could hinder the delivery of materials and equipment to job sites, page 20. Climate-related events and natural disasters, page 23, are another significant concern that can cause supply chain disruptions. The Energy Solutions backlog increase by $3 billion, page 35, indicates a potential concern about supply chain disruption, while unfunded government contracts at Mission Solutions, page 38, may also indicate future disruptions. In contrast to these concerns, there is no mention of inventory buildup on any page. However, the decrease in backlog from $25,536 million to $28,484 million, page 35, may suggest a potential concern about inventory buildup. That concludes the financial summary for Fluor Corporation. Feel free to comment below, and I will be happy to answer them when possible.